Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of Wall Street's finest paperwork with a little bit of sass. Today we are diving into a filing from TransAct Technologies, Incorporated, a company that deals with some interesting tech. So buckle up because we are about to decode their latest report and see what story is hiding in the numbers. And if you appreciate getting straight insights from corporate documents with a no BS approach, be sure to subscribe. We also have a Discord community linked in the description below where we break down these filings even further. Alright, so this is an 8K filing, which is basically a report for big events that shareholders need to know about right away. Think of it like a company's immediate progress report. For TransAct Technologies Incorporated, this particular 8K is highlighting an agreement they entered into. The main event here is a third amendment to Lease. This means they are changing the terms of a lease agreement they already have. Specifically, they are amending a lease for their corporate headquarters. Now, leases can seem a bit dry, but for a company, they are a significant operational cost and can signal a lot about their strategy and outlook. Let's look at what changed. Their lease was originally set to expire on the 31st of October 2025, but through this amendment, the lease has been extended. This is a pretty big deal because it shows the company is looking to stay put in their current location for a while longer. The extension is for 4 years and 2 months, taking them all the way to the 31st of December 2029. This suggests stability and a commitment to their current operational base. However, not everything in the lease is staying the same. They have also significantly reduced the amount of space they are leasing. They are going from approximately 11,000 square feet down to just 3,630 square feet. Imagine shrinking your office space by almost 2/3. This could mean a few things. Perhaps they are moving towards a more remote work model, or they have found ways to operate more efficiently with less physical space. And what does this space reduction mean for their rent? Well, the monthly base rent is now $6,806.25. That is a huge drop from the previous rent of $19,473.55. We are talking about saving over $12,000 every month. That is a considerable amount of money that can be redirected to other parts of the business like research development, or even returned to shareholders through buybacks or dividends. If you were paying over $19,000 a month and now pay just over $6,000, that is a massive cost-saving initiative right there. That is a direct hit to their overhead and can significantly boost their bottom line if managed well. Beyond the base rent, they will also have to pay 3.20% of any increase in the landlord's operating costs over the 2025 costs. This is a pretty standard clause in many leases. It means that if the building's general operating expenses go up, the tenant pays a proportional share. They also have to pay a monthly electric charge. So while the base rent has fallen, they still have variable costs to consider. An interesting detail here is that the landlord will be in charge of separating the new smaller space from the existing larger one, all at the landlord's expense. This means TransAct doesn't have to worry about the cost or hassle of physically dividing the office space. It is a straightforward cost saving and operational simplification for the company. Now, the summary we are discussing is just that, a summary. The full details are in an exhibit labeled Exhibit 10.1. If you want to dive into the nitty-gritty of lease agreements, this is where you would go. And of course, like most modern filings, there is an interactive data file. This essentially makes the information more accessible and easier to analyze digitally. It is a good sign that the company is embracing modern reporting standards. Looking at the signature on this report, we see Stephen DiMartino signing off as President, Chief Financial Officer, Treasurer, and Secretary. Having one person hold so many high-level positions is not uncommon, especially in medium-sized companies. It suggests a lean management structure, but it also means that person is juggling a lot of responsibilities. Now let's put on our investor hats and really think about what this means. TransAct Technologies Incorporated is clearly making a strategic move to cut costs. The reduction in office space and the substantial decrease in monthly rent are significant. This could be a sign of a company that is becoming more financially disciplined, or it could hint at a shift in their operational strategy, perhaps embracing a hybrid work model more seriously. This freed up capital from reduced rent could be a real boost. If they were spending nearly $20,000 just on rent before, and now it is around $7,000, that is over $120,000 saved annually purely from rent, and this is before factoring in utilities and other associated costs for the reduced space. This financial flexibility is a clear strength. However, there are always things to watch out for. While a smaller office space can be cost effective, it might also signal a potential slowdown in hiring or a change in company culture if employees are expected to work remotely more often. It's a balancing act. We haven't seen any major financial statements in this particular filing as it focuses on a specific event like a lease amendment. In a real deep dive, we would want to see their balance sheet, income statement, and cash flow statement to get a full picture of their financial health. But based on this lease amendment alone, TransAct appears to be taking proactive steps to manage its operational expenses. This is a positive signal for efficiency and profitability. They are clearly looking for ways to optimize their spending, and that is always a good sign for investors. The extended lease term also provides a level of certainty for their headquarters operations for nearly the next decade. So what is my take on this? TransAct Technologies Incorporated is demonstrating a commitment to financial prudence by significantly reducing their lease obligations. This move is a clear strength for the company as it frees up capital and lowers overhead. The extended lease term offers stability. However, the full impact will depend on how this shift in office space affects their employee productivity and company culture in the long run. It is a smart financial move, but it will be interesting to see if it translates into other areas of growth and innovation. Alright, that is our breakdown of TransAct Technologies Incorporate's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And of course, subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.